Indonesia. I think that despite the fact that she concentrates on Indonesian experience, I am sure that what she discovers and what she develops should be a kind of consideration for the rest of the comparative tax system, because complexity, I would say, is an inherent characteristic or trend of tax systems nowadays. Before commencing her doctoral studies, Fitria was a legal drafter at the Ministry of Finance of the Republic of Indonesia, so therefore she has knowledge of why tax law are so complex for over 12 years, and she's also a lecturer, or she was a lecturer at the Faculty of Law in Jakarta, Islamic, in the University of Jakarta. She holds an LLM in International Tax from King's College London, and a bachelor's in law from Jakarta Islamic University, and an associate degree in taxation from the College of State Accountancy, STAN. In order to make comments as a discussion for her paper and dissertation, I have the pleasure to have with us Professor Adrianto Dwi Nugroho. Again, sorry if I misspell your pronunciation. Thank you. And thank you, Adrianto, for being with us. It is a real pleasure for University of Valencia to have you as a discussant, despite that still we could not make it in person. Hopefully in the near future, to both you and Professor Shu to host you here at the university personally. Professor Nugroho is Yahana Hukum Fakultas Hukum University Gadjah Mada in Indonesia. I'm sure that I misspelled something. And he holds a Master of Advanced Study in International Tax Law in the Rijksuniversiteit Leiden. And it's Belanda Doctor of Laws in the Faculty of Law of the University of Helsinki in Finland. So thank you very much for you to come here, both as a presenter and a discussion. And whenever you want, the floor is yours, Fitria.
Thank you so much, Professor Garcia. So wait a moment. Wait. Okay. Okay, cool. Good morning, good afternoon, and good evening from Melbourne, everyone. Thank you for having me. I'm Fitria, PhD candidate from the University of Melbourne under the supervision of Professor Tim Lindsay, Professor Sunita Jogarajan, and Associate Professor Tess Hardy. So first of all, I would like to thank Professor Garcia and GTS committee for giving me the opportunity to present my paper. And also thank you, Professor Nugroho, for being my discussion today. Wait a moment. So before presenting my paper, I would like to briefly mention about my thesis. So my research investigates the causes of legal complexity in Indonesia income tax law and will propose strategies to better manage tax law complexity, including reducing unnecessary complexity. So this is my chapter outline. So I have researched and written some chapters. So previously in chapter 3, I discussed the driver and characteristic of legal complexity as a theoretical concept of this thesis. And in chapter 4, I've identified the sources of legal complexity of Indonesia income tax law, and this chapter also acknowledges that some degree of complexity is necessary to make law fit with intended objective. The question is, how can we differentiate between necessary and unnecessary complexity? So as a further investigation, today I would like to present my thesis chapter, chapter 5, titled Distinguishing Necessary and Unnecessary Legal Complexity in Indonesia Income Tax Law. So the complexity of income tax law worldwide has become a perennial problem. Various efforts have been made to simplify income tax law, yet the path to simplification paradoxically result in further complexity. So Indonesia income tax law are also complex. So based on my previous investigation, the complexity is rooted in numerous and detailed rules embedded in the laws, scattered across various and different legal sources. So on the one hand, complex rules are unavoidable to achieve various objectives and even competing objectives such as preventing tax avoidance, providing fairness, providing tax incentive for attracting foreign direct investment. On the other hand, an excessive amount can become problematic since it might complicate the process of complying with and enforcing tax law, increase compliance costs, exacerbate uncertainty, compromise the rule of law, and hampers tax revenue collection in Indonesia. Also, in hierarchical legal system like Indonesia, while legislative hierarchy can reduce the level of complexity in the income tax statute, it can lead to excessive legal complexity such as the proliferation of regulation and overlapping provisions. That is why academics and government bodies advocate for reducing unnecessary legal complexity. While distinguishing necessary and unnecessary complexity is beneficial to address problems raised due to tax law complexity and to identify which area of tax are appropriate for simplification, little research has been done on this topic, and there has been very limited analysis of the causes of income tax law complexity due to hierarchical legal system. So my paper aims to distinguish unavoidable and unnecessary complexity using Indonesia income tax law as a case study. So this paper begins by exploring the methodology employed by scholars to identify necessary and unnecessary legal complexity within legislative frameworks. Next, it will focus on 3 case studies: legislative hierarchies, transfer pricing rules, and tax incentive for attracting foreign direct investment, especially to identify whether complexity in this area is unavoidable or unnecessary. Scholars at government bodies have proposed different approaches to distinguish necessary and unnecessary legal complexity. Understanding the approaches is essential as the tool to investigate which area of Indonesia income tax law is unnecessarily complex. So Oak first highlights that some degree of complexity is an unavoidable result of any tax system that aims to raise revenue, allocate income fairly while minimizing disruption to achieve these goals. He suggested that to assess unnecessary complexity, one must first understand the objective of tax measures and whether the resulting system is appropriately structured. However, identifying the purpose alone would not be sufficient. The UK Office of Tax Simplification considered intrinsic complexity found in the structure of tax, including the rate of change and the length of legislation. And as for the length of legislation, I think this factor is a consequence of having complex policy and cannot be separated from the feature of laws, such as extensive rules and frequent changes, because they can cause the legislation to become longer. However, the length of legislation can be a starting point to investigate further whether the legislation is unnecessarily complex. Similar to Oak, Sherwood refers to necessary complexity as the minimum degree of complexity to achieve various policy goals, such as economic and social aims, certainty, and addressing tax avoidance. While examples of unnecessary complexity include poor policy design, too many special cases, poor guidance, and excessive change. Temer has proposed a strategic approach to measure unnecessary complexity with respect to legislation, tax policy, and tax administration. So similar to Oak, they consider the aims of taxation as the starting point. Further, they suggest comprehensively analyzing many factors such as considering competing policy objectives that could lead to complicated regulation and identifying risks that could increase unnecessary complexity. Finally, it is worth mentioning the work of Australian Law Reform Commission in reducing unnecessary complexity in Australian finance and corporate legislation. So to identify unnecessary complexity, they focus on whether legislative features such as the length of legislation, indeterminate concept, prescriptive rules, and legislative hierarchy are well structured, drawing a regulatory theory perspective. Example of unnecessary complexity include the notional amendment clause and overly prescriptive rules. So based on the previous studies, it seems that there is no general rule for what counts as necessary and unnecessary complexity, since it varies and is based on a case-by-case basis. However, there is an agreement that necessary complexity refers to the minimum level of complexity that is fundamental to achieving desired policy objectives. This minimum level of complexity is usually unavoidable, arising from both intrinsic and extrinsic factors inherent to taxation. So intrinsic factors are associated with tax law that must capture complex real-world economic activities while providing fairness, enhancing certainty, and preventing tax avoidance. External factors, example, involve the influence of stakeholders, legislative design preferences, the lawmaking process, and the legal framework of a country. In contrast, unnecessary complexity represents a byproduct where complexity surpasses the minimum required. So to identify unnecessary complexity, this paper first considered the alignment of the complexity of tax law with their intended objective. Next, it investigates whether legislative features are well structured to achieve intended outcomes, drawing on statutory interpretation and regulatory theory approaches such as principle-based regulation. For the first case study, I focus on legislative hierarchy. So one of the causes of the complexity of Indonesia income tax law can be derived from the use of legislative hierarchy, especially the reliance on very subordinate regulation and the use of a very wide enabling power from the statute to subordinate regulation. I argue that unavoidable complexity in Indonesia tax law appears due to general factors such as civil law tradition, political factors, and complicated lawmaking process. Transferring detailed rules from statute to subordinate regulation is unavoidable in Indonesia. Theoretically, the delegation order should occur in a hierarchical manner, so one level from the top to the bottom. Also, the lower the regulation, the more detailed and concrete the rules. However, such delegation orders are regulated slightly differently in the Indonesia lawmaking law. So enabling power from the statute to a minister directly is possible, but limited to technical and administrative rules. However, it is unclear and raises another issue of what technical, administrative, and substantive rules are, since these terms are undefined. Practically, substantive income tax rules like tax obligation are still found in ministerial regulation. Many specific tax treatment or new rules modifying the statute appear in the subordinate regulations. So this phenomenon happens partly due to a wide enabling power from the statute to subordinate regulations. There are justifications that a statute can grant wide power to subordinate regulation. So from a regulatory perspective, the legislature's inability to foresee future situation could be the initial reasons. It then leads to a demand for flexibility to address future situation. For example, the phrase other income under Article 4.2 of the statute provides greater flexibility for the government to tax other forms of income using the final scheme without changing the statute. For example, since tax compliant level of micro, small, and medium enterprises is very low, the government could flexibly introduce presumptive tax to tax them through government regulation since 2013. Another justification is the need to anticipate and respond quickly to unforeseen circumstances. For example, the minister benefits from enabling power under Article 22 of the statute to tax the digital economy, such as crypto asset transaction using a final scheme. And during COVID-19, the government and the minister had greater flexibility in introducing various tax policy to address crisis through regulation rather than changing the statute. While this matter could be resolved through the amendment of the statute, the complicated lawmaking process in Indonesia highlights the need for greater flexibility. So the statute making process must undergo various processes, the discussion with the legislature can be tough and need significant time for negotiation. The legislature is also famous for low productivity. So conversely, lower level regulation like Ministry of Finance regulation facilitate a faster and more effective drafting process. Political factors also contribute to the creation of wide enabling power. For example, a blank delegation, that is the government power to stipulate anything that is necessary to implement the law, was a common practice during New Order regime. So during this period, the legislature was largely beholden to the president. In contrast, after the New Order regime, so since 1998, legislature have been characterized by fragmentation and political maneuvering. However, this fragmentation often makes reaching consensus difficult, which result in the statute text being broader than the initial proposal. So as mentioned by Peter Sack, when conflict arises, decision might adopt open-ended or indeterminate legal standard by shifting policy dispute from one rulemaking locus to others using delegation order without truly minimizing the conflict. As a result, many specific text treatment or new rules modifying the statute appear in the subordinate regulation rather than being explicitly stated in the statute. So it could then challenge the comprehensibility and navigability of the law. So the use of broad enabling power is not unchallenged. So in 2009, the Constitutional Court ruled that the use of wide delegation order is permissible for providing a legal base for addressing the state's evolving needs quickly. In contrast, in the subsequent rulings, the Constitutional Court has ruled that the delegation of authority to the minister is not permitted in the form of restriction or expansion of the rights and obligation, but is limited to technical and administrative matters. However, broad enabling power can become excessive. First, the government might overstep the power given by the law using blank delegation. So, for example, government introduced new authority for the Directorate General of Taxes to undergo a verification process. The Supreme Court ruled that this power should be interpreted as allowing the government to stipulate procedural or detailed rules that have been established in the statutes. The exercise of broad enabling power can lead to significant tax dispute between taxpayers and tax authorities, especially when ministerial regulation extend beyond regulating technical and administrative matters to include restriction on taxpayers' right and obligation concerning the deduction of promotion fees. Further, the exercise of broad enabling power coupled with the phenomenon of sub-delegated legislation not only leads to the proliferation of regulation, but also increases the risk of overlapping provisions since subordinate regulation introduce rules that differ from those stipulated in higher level regulation. So the next case study, I focus on the complexity of transfer pricing rules. So Indonesia transfer pricing rules have become denser and longer since they have developed significantly from relying loosely on the arm's length principle to the binding codification of transfer pricing rules. So I investigate the justification for this development, specifically whether more detailed rules in this tax area are unnecessarily complex. So initially, transfer pricing rules were drafted very broadly without detailing specific procedural rules to apply arm's length principle. This phenomenon was common in developing countries during the 1990s because the government still paid less attention to the issue of transfer pricing. The issue of transfer pricing has begun to receive a lot of attention after many cases of tax manipulation in 2000s. This encouraged countries to formulate more comprehensive guidelines that align with OECD transfer pricing guidelines. And following the announcement of the OECD BEPS action in 2015, Indonesia has revised some regulation to deal with transfer pricing issues by aligning the regulation with BEPS. Despite its development, scholars argue that more comprehensive rules on transfer pricing are needed to apply arm's length principles. Guidance on applying arm's length principle under the Directorate General of Tax Regulation was also criticized since this regulation is neither included under the hierarchy of law nor recognized under the lawmaking law. So the current ministerial regulation has consolidated previous regulation. This regulation not only codifies transfer pricing rules, but also indicates that transfer pricing rules are now becoming more detailed, such as stipulating specific activities for applying arm's length principle, rules concerning corresponding adjustment and secondary adjustment, and etc. It must be noted, however, that Indonesia has significantly added to the previous rules, but still not the full detail as in OECD guidance. So the justification for providing sufficient guideline is linked to the difficulty in applying arm's length principle. So from a regulatory perspective, arm's length principle serves as a principle or standard that is less precise. In contrast, a rule-based approach is usually a precise formulation. Braithwaite argues that a set of rules explaining how principles work in a complex tax area is necessary to make the law more certain. The question is how detailed the guidelines are in explaining how the principle works. So in the case of Indonesia, where the guidelines do not go into sufficient detail, the degree of subjectivity in interpreting the laws is greater. For example, tax auditors could flexibly select the data manually to be used as comparable data based on their own justification. However, in many cases, when tax authority lost, there was a tendency for tax auditor to choose comparable data by cherry picking, which could result in aggressive adjustment. Another concern is the difficulty and inaccuracy in applying principle by taxpayers and tax auditors, leading to significant tax dispute. In contrast, multinational enterprises in Indonesia, assisted by their tax practitioner, tend to exploit gaps in the rules for their benefit. Also, the greater flexibility, such as in choosing the most appropriate method for determining the arm's length price, can leave room for manipulation. The development of more detailed rules in transfer pricing regulation is also triggered by the need to reduce inconsistency in applying the laws. There was a lack of sufficient guideline on secondary adjustment, leading to varying application by tax auditors. Meanwhile, judicial decisions pertaining to secondary adjustment had been inconsistent. So while most decisions have favored taxpayers, rejecting the constructive dividend if the recipient was not shareholder, in other case, tax court judges upheld the tax authority determination without requiring direct ownership by relying on the tax treaty and commentary of the OECD model. However, since judges are not bound by previous judicial decision or precedent, inconsistency in judicial decision regarding tax matters are unavoidable. Thus, it seems as necessary to provide more detailed rule on transfer pricing, not only to combat tax avoidance, but also to enhance certainty and close the gap in the laws to facilitate the implementation of arm's length principle. Also, I argue that although guidelines will not reduce such subjectivity, they could minimize disagreement between taxpayers and tax authorities. So in the third case study, I focus on tax incentive for attracting foreign direct investment, especially tax holiday and tax allowance regulation. These types of incentive have mushroomed in Indonesia, contributing to overall legal complexity. Indonesia tax holiday policy and regulation transform from a discretionary approach to readily verifiable criteria. This change increases complexity due to the introduction of many rules pertaining to specific eligibility criteria, obligation, and procedural rules for granting mechanism. However, I argue that this reform is necessary. So before 2018, the eligibility criteria were not detailed and tax holiday periods were broadly drafted. Decisions to grant the tax holiday were at the discretion of the minister. This process could lead to uncertainty since the applicant cannot predict the outcome. Also, the absence of clear provision regarding the duration of tax holiday could hinder investors from assessing the comparative attractiveness of investment opportunities in Indonesia. This uncertainty renders tax holiday incentive less attractive, as shown by the fewer applications received. So on the other hand, current regulation that stipulate clear eligibility criteria and specific periods help potential investor assess their qualification before applying. Although detailed rules can increase compliance costs, investors might prefer this scheme as they can be more certain whether they are entitled to the incentive. This framework has not only made the incentive more certain, but has also contributed to a significant increase in the number of applicants. This framework also helps authorities provide legal justification for denying such entitlement if applicants do not meet the qualification. They are arguably necessary because tax incentives are given selectively, so various requirements and procedures are needed to make rules fit with purposes, including avoiding such abuse of the benefits. Finally, reducing broad discretion in tax incentive scheme can limit the negotiation space between taxpayers and the government, which could prevent corrupt activities. Despite its economic rationale, tax holiday and tax allowance rules are scattered in various regulations, both tax and non-tax law, and administered by different legal institutions. So this fragmentation appears arguably due to several institutions having competing interests in this area. So for example, the Ministry of Investment is the government institution that most support tax incentive because it affects investor location decisions. In contrast, the Directorate General of Taxes was least supportive, as tax incentives are neither the only factor for attracting investment nor the most important factor. The scattering of tax incentive regulation across different domains could undermine the navigability of law and increase compliance costs, since taxpayers cannot easily locate certain provisions that apply to them. Also, if tax incentives are not consolidated into tax law, they could lead to conflicting or overlapping practices, which could increase revenue losses and limit the intended benefits. So in summary, this paper has identified the area of Indonesia income tax law that is unnecessarily complex. First, the ongoing reliance on subordinate regulation through wide enabling power highlights the complexity and challenges of balancing the need for legislative flexibility and ensuring clear rules and responsible use of executive power. Unnecessary complexity could occur specifically when a very wide enabling power is used to expand government or minister roles, to limit taxpayers' right and expand taxpayers' obligation, as well as to create tax rules that are not clearly derived from the statutes. Second, the rise in the detailed rules in the transfer pricing regulation is needed to help both taxpayers and tax auditors apply arm's length principle appropriately and reduce inconsistency in the law's application. However, it must be noted that the arm's length principle is a standard, so it will always be open to interpretation, while adding more detailed rules could enhance certainty. Overly detailed rules are also prone to tax avoidance. And the structure of tax rule in tax holiday is also justified for enhancing certainty and transparency and preventing tax abuse. However, the scattering tax holiday and tax allowance rule are unnecessarily complex and can limit the intended benefits. So these findings serve as a basis for further investigation into ways to reduce unnecessary legal complexity. So this is the end of my presentation. This paper is still work in progress, and I sincerely welcome any feedback or insight you might have to help improve it. Thank you so much for your kind attention.
Thank you, Fitria. Very, very interesting presentation, very complete, I would say. But you touched on many aspects of how tax legal systems are developed. And now it's the turn for Adriano, Professor Nugroho. The floor is yours. Thank you for coming.
Okay, thank you, Carlos, and everyone at the University of Valencia for having me today. And may I say also hello to all the participants in the Zoom meeting, Professor Mosquera, Professor Tandon, Daniel, Zaria, Raul, and also Botao. So yeah, so Fitria, your paper was very insightful and really reflects a lot from your paper and how the legislation, the tax legislation in Indonesia has has been enacted. Yeah, you rightly pointed about how The law is quite concise, but we are all living in the jungle of Minister of Finance regulations and maybe even the Director General of Taxes regulation. Yeah, sometimes it's also they contain also very technical aspects that I think as a common taxpayer we should also master or at least know about the existence of these regulations, because otherwise we can fall into the trap of failing to fulfill the obligation. So I think, yeah, your your paper really encapsulates the main problem, and some of them are quite constitutional. Yeah, I like how you discuss about the recent developments on constitutional court decisions regarding tax matters. We know that these cases were not exactly a classic constitutional court where they actually reviewed the consistency of the law with the constitution, but they just mentioned about the delegating articles in the law, and then they really aim at the Minister of Finance regulation, who the Constitutional Court ruled that these regulations are actually beyond their authorities, yeah, because they regulate on substantive matters and then they create restrictions, and those things are not supposed to be regulated in a Minister of Finance regulation. So yes, I think your paper will increase the awareness of the people, and then they will try to evaluate the existence of these regulations. Some of the strengths that I think you have in your paper is your right use of methodology. So you yeah, you quoted a lot of concepts, and also you did a lot of you did a comparative studies with the UK system and also Australian system, and then you you demonstrate the strengthening linkage between tax law and constitutional law in Indonesia, as I mentioned before, and you highlights main legal issues in the enactment of tax laws in Indonesia, which is the existence of these regulations and how they nowadays. You mentioned about the Minister of Finance regulations on the taxation of crypto assets, which is actually taxing a new kind of income, yeah, which supposedly be done in the law. So the government should have gone to the parliament and asked for an addition of taxable income, but they didn't do it because of the difficult legislation system that you mentioned in your paper. So they just did a shortcut. They enact the regulation and they said that they will tax the transfer of crypto assets from crypto assets activities. So I think if this kind of regulation is maintained and become a precedent in the future, that will be very dangerous, because now taxpayers would be vulnerable to be taxed more heavily, yeah, without any consent of the parliament. And remember, the law itself, Article 4, Paragraph 1, defines income as any increase in economic capacity, and that was the main reasoning of the Minister of Finance regulation on income tax on the crypto assets. So I think they will try to use this broad definition of income in the law to enact regulations, and maybe in law enforcement, when they are disputing with the taxpayers in tax court, they will use the same argument that if the income somewhat has characteristics of increasing one's economic capacity, then they will try to tax it anyway. So I think that that in itself is problematic, because it will create some kind of abuse of power. Yeah, there is no parliament control in taxing new income in the society. So yeah, so I just found out that this was just one chapter of your paper. So I think many of my addresses here might have actually be discussed in another chapter, but maybe if you want to take this as a suggestion, that will be great. So the first one is about complexity. So you mentioned about how complexity can be categorized into necessary and also unnecessary. Uh, but I also thought that complexity is a matter of perception. Yeah. So maybe you might want also to categorize those which are like an objective, like a true complex rules, and also ones that are just a perceived complex rules. You know how people in Indonesia and probably they don't really know about their tax obligations. They don't really know about their tax rights anyway. So I think when you ask them what's the problem with fulfilling tax obligations, then you will find that they will say that the rules are just too complex. But maybe these rules are somewhat readable for those who are studying tax or tax law, maybe. So I think complexity sometimes is also a matter of perception as well. So you might want to well, if you don't want to discuss into like a perceived complexity, but at least you can also mention that sometimes complexity can also have takes place in a matter of people's perception on taxation itself. Yeah, so they will always say that the tax is complicated, especially when the self-assessment system is taking place. Second one, maybe the benchmarking to UK and Australia reforms. That was a very nice piece of that. But I think you you didn't like take something from the experiences in those countries and take it, or maybe to transplant it a little bit to the Indonesian system. So I think if you can relate, or if you can at least grab something from those systems and try to adapt it, or maybe try to make it relevant to the Indonesian case, I think that will be more beneficial to the comparative study that you have conducted. Uh, and then the selection of transfer pricing and tax incentives to illustrate complexity. Uh, yes, I think I agree with you. Those rules are pretty complex, but I think maybe you want to add like one paragraph or two mentioning about like the bigger areas in the Indonesian income tax laws that you think is complex, and then you can choose transfer pricings as incentives as your main focus, so that the reader can have some perspectives here on why you choose the two topics as your main research gap. Uh, we know that transfer pricing rules are complex, and we know tax incentives in Indonesia, the application process, and also the understanding of the rules itself is difficult. But maybe to give more perspective, you can put them besides all the other things that you think are complex, so that the readers can know actually why you think these ones are the most difficult ones among the others. So I think that could give a little perspective, yeah. Uh, and then the constitutional court cases, you might want to include a more recent cases on the Minister of Finance broad enabling power in dealing with tax crime investigations, yeah. I think it was a 2023 decision. So they said that the Minister of Finance actually they over-regulate the rules on I think about detention or something like that, or maybe some coercive forces, the use of coercive forces in tax crime investigation. And then they regulate that in the Minister of Finance regulation, and then the applicant of the plea to the Constitutional Court thought that this is overpowering the power of a Minister of Finance regulation. Yeah, the Minister of Finance cannot make a person cannot use coercive forces against a person, so it must be placed in the law. So I think that could also be a good illustration on how Minister of Finance regulations are quite problematic in terms of regulating tax procedures in Indonesia. Um, yeah, excessive broad enabling powers. You might want to explain why you prefer one example over the other. You mentioned about the how the Minister of Finance regulations regulate on the interpretation of promotion costs. Yeah, so I think that was a good example. But again, I think you can give the reader more perspectives on which of the matters that that are problematic according to you. So you make a inventarization of these problems, and then you choose them as an illustration. You choose one as an illustration. So I think that would give a broader idea on the complexity and the problem that you want to solve. Tax incentive policies. There are also examples on tax incentives on vocational education and also R&D activities. Yeah, so I think that could also add to your already good examples on how tax incentive in Indonesia is, yeah, they're, it's quite difficult to apply, as if they are not going to give you the incentive anyway. Yeah? So it's like a half-hearted policy sometimes, because they want to give you incentives, but then they will make it difficult for you to get one of them. So I think that could add to your examples. Yeah, and maybe some conclusions and argument needs to be revisited. Maybe maybe some just a typo or just a mistyped or just a misconcept argument, like ministerial regulations are recognized as legally binding if they are issued by higher laws. So I think the Ministry of Finance regulations are not issued by higher laws, but they are instructed or they are delegated by the higher laws. Yeah, I think the issuance of the MOF regulations, I think, is the MOF himself. And income tax rules that are considered substantive, such as rules concerning tax obligations. Yeah, I think you can have different opinion than mine, but I think matters concerning tax obligations can be more rightly classified as a formal kind of tax law rather than substantive. So maybe you might want to revisit that again. So if you think it's still substantive, then it's okay. That's your choice. But I think sometimes we talk about tax obligations, and we usually are discussing these obligations when we talk about procedural tax laws. Yeah. So I think that's some of my points, Carlos, but very nice work, Fitria. So hopefully you can finish your PhD on time, and you can finish this chapter as part of your thesis. Thank you very much.
Thank you very much, Rianto. Very insightful and very deep considerations. I don't know if Fitria, you want to react or to answer?
Yeah, thank you. Thank you so much, Professor Nugroho. Your feedback are really insightful and of course helpful. I've already written make a notes. Yeah, of course I will follow suggestion like your suggestion, for example, like, yes, you're right that complexity is a matter of perception, or I would say it's a very subjective, like for lay people all of tax law are complex or complicated, but for for tax practitioner, maybe it's still somewhat complex. That is why I try to make it neutral, because before I say this is a very complex or overly complex, I try to align with the intended objective. Because if it's very simple, then maybe they cannot achieve for example, the objective itself. Like, for example, if transfer pricing is very loose, then it's prone to tax avoidance, and then there are so many tax dispute and etc. But yeah, I will mention that this about maybe like a sort of discussion, but this is just a matter of perception. But I will stick with necessary and unnecessary one. And also regarding the experience from the countries, I will draw lesson from some countries, including Australian or the UK, but maybe I would discuss further in other chapter, not in this one. So far, because right now I still focus on identifying the causes of legal complexity, and in chapter, like in the last chapter, I will discuss like approaches or strategies. So I might draw lesson from global literature or global practices, how to better manage tax law complexity. And also about the transfer pricing and tax incentive, I actually already identified overall complexity in different chapter, like in previous chapter. And yes, I still focus on 3 areas, but it's still work in progress because I also want to discuss about the kind benefits or natura, and then informal economy and etc. But I still, like maybe I can focus on this one first. And thank you so much for suggesting me about the R&D and vocational, because I haven't looked at that, like at that regulation. But you're right that it's hard to apply, then it's unnecessary complex then. Thank you so much. And then regarding the more constitutional court, yeah, will include as well tax crime investigation, and maybe about tax obligation. So the problem is, since there is no definition about administrative and substantive and also procedural rules, so it's a matter of subjectivity. So like you mentioned that tax obligation can be a procedural or administrative, but for me, maybe in specific case, it can be like a substantive rule. So because there is no definition, so people can see that, so this is a substantive thing or this is procedural. That's why I might rely on constitutional court to consider which one is procedural and which one is substantive rules. But thank you so much for your feedback.
Thank you, Fitria. I don't know. I think I see Irma that wants to intervene. Irma, whenever you want, the floor is yours.
Thank you so much. And thank you so much for the presentation. Hopefully you can hear me well, because I'm in the middle of a construction right now. But I thought that your topic is very interesting, and especially in Indonesia, there is a lot of different layers of complexity. And one of them also, for instance, we have a PhD in late and who is doing only the role of the judiciary. And that is already another level of complexity. And my question to you is, to what extent you can separate these layers of complexity, some coming from the legal system itself, from Indonesia, some coming from being in Asia, like being Indonesia wanted to be kind of one of the leaders there with the economic, so attracting foreign direct investment, for instance, and to what extent is because of the participation of Indonesia in all these international standards. Because when you talk about transfer pricing and you start comparing this is complexity, transfer pricing is because of the OECD and the guidelines. But if we talk about tax incentives, it's specifically for Indonesia because of the political system, what you have, but at the same time, the Pillar 2 brings another layer of complexity. So if you start thinking about this is international, Asia being competitive, and then you go to the legal system, and then you go to down all the, then perhaps it helps a little, because you cannot, in my view, it's very difficult to discuss now tax incentive without discussing Pillar 2. Because you can say there is discretionary authority or there is less corruption, but Pillar 2 is also doing that with the tax, with the raise to the bottom and the 15%, taking away the tax incentives and so. So if you can think about how do you give examples on these layers of complexity, some because of the imposing of international standards, and some because the legal system, and some because of the political system, some because of Asia. So that would be very interesting, I think.
Yeah. Thank you so much, Professor Irma. So you're right that I actually want to discuss the international taxation as a challenge to reduce complexity, because, like right now, to be honest, I still like putting a puzzle, so like doing one by one. But regarding tax incentive, for example, or transfer pricing, I would also discuss about international taxation, because like the complexity of transfer pricing partly derived from like Indonesian obligation to follow PEP standard, for example, or OECD transfer pricing guidelines. And also regarding the tax incentive, we know that there is a tax competition in ASEAN areas. And I also discuss about why this law become fragmented. But when I look at the Malaysian regulation, actually they also scatters in many regulation, because like their tax incentive are stipulated in Malaysian investment law. So there is a similarities as well in ASEAN and also in Indonesia. And right now I haven't discussed that things, because I will discuss in another chapter. But maybe at the end of my candidature, maybe I will make a group of so my supervisor already told me that maybe you will restructure the whole thesis, so like grouping maybe based on the topics, so like transfer pricing, and then discuss about like international taxation in that area as well, and tax incentive as well. So yeah, you're right that, and I'm still thinking restructure my thesis, but right now I still focus on piece by piece first, right?
Thank you. Any other intervention? Just since there are a few moments, I don't know if it's a remark or consideration. In your presentation, I wanted to see, and I think I have seen, that some part of the complexity, trying to distinguish what is necessary or unnecessary. In fact, what it really tries to hide is the kind of the continuous fight between the legislative and the executive. So at the end, most of the time, what we see as a complexity, in fact, it's a battle for the rule of law, which it's even a more higher topic in what you are discussing. It's not about complexity of the tax rules, but they become unnecessary because at the end, the fight is solved by means of using unnecessary, unpredicted, and not or inadequate means to fill the gap of what the tax, how the tax should be and how it should be paid. And if that is so, truly, I think that as Andrew already pointed out, you develop. I think that your presentation shows a very valid and solid constitutional and administrative law basis, and I think that from a pure legal perspective, I think that this is the correct approach. And obviously, it is not your sole approach to that, which means that your thesis, it's very solid. It's that you also take into consideration other type of policy objectives of Indonesia, as Irma pointed out. But I think that it is important that you are wise enough to distinguish, on the one hand, necessary and necessary, which is a concept that may be doubtful what is the meaning. But on the other hand, what are real issues, problems that happens almost everywhere of using mechanisms, developments, rules, and procedures to scale what we consider traditionally the normal development of a state under the rule of law.
Yeah, Professor, would you please repeat a bit regarding the question, because I a bit lost the connection in the. I'm so sorry.
There was not a connection, and there was not a question. It was only a remark or a comment just after your intervention of saying somehow I think that you did, but it's important that you properly identify when dealing with necessary and necessary complexity. Sometimes this complexity, what is called complexity, is in reality a fight between the executive and the legislative in order to overcome traditional rules of tax ruling, how tax rules are made, and because we know how they should be made, at the end they are made somewhere somehow different, because at the end there is a kind of desire of the executive to leave or to get outside of the control of the parliament. And obviously you can study that from different implications, from different sides and different perspectives. It's an evolution, it's a trend, it's a tendency that some in different showings, because there are different types of normation procedures in different countries, but there's a tendency that you can identify, as I said in the presentation of your paper, almost everywhere. I just came from Mexico, where dealing specifically with this issue, which is the crisis of the principle of legality in tax matters, that in one area or in the other, at the end, we all see that is showing more and more, because the executives want to take the lead, but taking the lead, overruling what is traditionally conceived as the rule of law.
Yeah, you're right, Professor, and thank you so much for your insight.
Thank you. So there's still some minutes left. I don't know if the newcomers want to raise some issues or not. If not, I suggest that we cut here, we go to the break. But before going to the break, I simply want to announce a slight change in the program, because one candidate, Guillermo Silvia Rossi, just recently announced that for personal issues, for personal reasons, he will not be able to make the presentation today. So therefore, we are now forced to make a change in the program, which means that after the break, we will start at 15:30, and we will continue with session 5A by candidate Daniel Olica, and after that at 16:30 we will continue with the last presenter, which is Raquel Alama, who is here with us, and after that we will end with the closure of the program. So thank you very much, and we start here the break. We see back again at 15:30, Spanish continental time. Thank you.
Thank you.